Hey guys, I wanted to talk about super microcomputer, ticker symbol SMCI. So obviously this has been a hot play. It's rallied strongly, okay, ever since, November, December of last year, okay? It's been on a stellar rally going up, even more than Nvidia, okay? I want to first point out the difference in valuation metrics, okay, between the two. So first off, SMCI, their gross profit margin at the end of December, so December 31st, 2023 was 15.4% compared to Nvidia's 72.7% as of January 2024, okay? So know that it's a big difference, obviously. And SMCI is profitable, but their cash flow is actually still negative, okay? But I expect that to change in the future again. So you got to look forward, obviously, with this company, and their forward price earnings ratio with SMCI is at 31, a little over 31. So that's not bad. That's not excessive. And so that's why I like this company long still. Okay, obviously, hopefully you bought it, when it was cheaper, right? But I would make sure it stays above $901. There's some support there. So if you're a short-term trader, okay, and you don't want to deal with any downside if it did correct hard again, then you want to set your stop loss right below 901, maybe 899 or 895, or you can set it below where the share offering was. So they had to raise capital, as we know, at $875 a share. So you could put your stop loss maybe at 869 or somewhere below that, because if it went below that, definitely I'd want to stay away from the stock until it finds a bottom again. Now, the next catalyst for SMCI, their earnings report comes out May 7th, okay? We need to make sure that they crush earnings and, more importantly, crush on their guidance again, like last earnings. I think they can do it. And right now, it's at a $56 billion market cap, right around there, okay, which isn't, I think this can be a $500 billion market cap one day if they stay on this trajectory, of course, right, where they keep showing growth. If you don't know what Super Microcomputer does, it's a plug and play where they buy the GPUs, okay, from Nvidia, and they package it all up, customize it, so it's ready to go. They sell it and ship it directly to their customers. And like I said, it's plug and play. So the customer gets it, they plug it in, and it's ready to go. So they don't have to do anything on their end. So it's obviously convenient. Now there's obviously costs associated with that. SMCI has to spend more money. That's why they raise capital on purchasing these GPUs and all the components that go into setting up this plug and play option. Okay. So again, that's why their margins are lower, but I do expect we want to make sure we watch that in this earnings report. Make sure margins are going up, operating margin. Again, cash flow has been in the negative. We need to make sure that gets into the positive, which I believe it will eventually. So in their price earnings, like I said, forward looking is just over 31 with SMCI, which Nvidia's last time I checked was about 35. So that's why these can still have more room to go up, especially when other companies like ARM Holdings are trading for twice this valuation or more, okay? ARM does have really high gross profit margins too, like Nvidia, which I like that company. But we know we got SoftBank, right, that owns 90% of shares. At any point they can sell, and that's going to have a huge impact on the stock, which is why I don't want to have a huge position in it unless it really fell back down to the $100 level, okay? But I do have a small position in that. But anyways, I wanted to point out some metrics, the difference between SMCI and Nvidia, okay? And then also, we know SMCI works right down the street from Nvidia, so I expect more collabs and partnerships, okay, with each other. And then, like I said, the main catalyst, so we got to watch out, is May 7th, so make sure you mark your calendars. We need to make sure that earnings report beats, and like I said, guidance beats expectations by a good amount, so this rally can continue.